Hi, welcome back to our channel where we bring you the latest financial insights and strategy to help you make the most of your investments. Today, we have an exciting topic to discuss: the power of index funds. And who better to learn from that the legendary investor itself, Warren Buffett. In this video, we'll explore why index funds have been a key component of Warren Buffett's investment philosophy and how they can be a winning strategy for individual investors like us. So let's deep dive into the topic. Warren Buffett is known for his long-term investment, and as you all know that he has a company that is Bers, Berkshire Hathaway, right? If you'll see his video, if you watch his video, then you must have heard that he used to recommend to the individual, to the retail investors to invest in the index funds. And there are several reasons. Let's see what are the reasons and why he recommends the index funds. The first is the broad market exposure. Like as you know, if you are able to find the quality stock, then you have you should have the skills to find the quality stocks, and there are chances that the quality, if you invest in the quality of the stocks or if you invest in stocks, there are high risky that, and if ever there are high risky where you need to follow the market, you need to follow the stocks, you need to follow the company what they are doing, and accordingly you have to do the entry and exit from the stock. However, if you invest in index funds, there are high chances uh, that it will diversify your portfolio of the stocks. Example, if in USA that is S&P 500, or in India it's Nifty or Sensex. So let me explain the Nifty 50 also here. If you invest in the Nifty 50 index funds, then your you are covering your portfolio itself. It will diversify to the all the top company of Nifty 50, and accordingly your the risk, your the exposure, it will diversify, since the Nifty 50 stocks involves the top stocks among all the sectors, among all the company, and based on the market capitalism as well. So there are high chances that you will gain a broad market exposure when you will invest in index funds. The second is low cost. So mostly if you see uh, there are various index funds are there. Okay, mostly if you see the Nifty 50 index funds, or Nifty B, okay, where you can buy this Nifty funds doesn't have a high expenses ratio. As you know, if you buy any SIP or any mutual funds, there will be some expenses ratio will be there. But if you compare the expenses ratio, the Nifty 50 expenses ratio is very low, or Nifty 50 expenses ratio is very less, or there are very low cost to manage this Nifty 50. So because of this, when you will invest like 1,000 rupees or 500 rupees or any amount, because of the low cost, you are investing the maximum amount of your investment amount into the stock. Take an example. If there are normal expense ratio of 2%, 3%, example. So in this case, if you are investing 100 rupees, and if the 2% expenses ratio is there, then only 98 rupees it will get invested. But take an example, if the index fund cost is 0.5%, right? In this case, your investment amount will become 99 rupees, 99 rupee point 5 rupees, right? So this ensures that because of this low cost, these index funds are very good. And this the third is the consistent performance, right? Now if you will see, the advantages of the index funds is in the long term, right? In the long term, there are so many stocks which will go up and down, right? And there are so many stocks uh, which will outperform the market, and there are so many stocks which will underperform from the market, right? So in this case, if you will take index funds, okay, the benefit is in long term it always outperform the overall market, right? Yeah, if you have the skills, then you can invest in the good stock, in the quality stocks where the stocks will outperform the market. But more maximum people, most of the people, they will not able to do. That's the reason Warren Buffett used to tell that index funds used to outperform the market. That's the reason it will give the consistent performance. Yes, in the short term, it no like in 2008 or 2020, there is huge crisis in the market, and because of that, in the short term basis there are negative return. However, if you see the long term wise, the index funds is the very one of the best investment which you can make it, because of it gives the consistent performance over the year. The next important factor is the simplicity, right? In the simplicity means, take an example. If you have to find in quality stocks, you have to put time to find the quality company. You have to put time to know when to exit, when to enter into the market. And because of this, you have to gain the lots of skill, and you have to uh, do so much calculation, right? You have to do the fundamental analysis, technical analysis, market sentiment analysis. But if you invest in index funds, it's very simple. No need any calculation. Just buy at a consistent level. Just buy and keep it for the long term. So the simplicity matters a lot, right? You no need to think a lot. Uh, no need to put any effort into which stocks to buy, right? So this is the power of simplicity. Because of this, uh, Warren Buffett also recommended the index funds. The next is in 2007, right? In 2007, Buffett endorsed to the index fund that he has given an open challenge itself. Okay, he has given open challenges that in the next 10 years, okay, the index fund will outperform the market. And do you know what? Spoiler alert, the spoiler alert is he on the bed. It means there are so many experts, so many fund managers, so many quality fund managers who are who were managing different funds, and because of that, the quality manager or expert, they were thinking that they can outperform from the index funds. uh, but Warren Buffett was sure that index fund will outperform from the other stocks on an average. Because of this, he had the confidence, and he has the guts, and he has the uh, commands, right, over the statement when he told in 2007. And after 10 years, whatever he had told, it happened in the market. Okay, so now let's see uh, what will happen, right? What will happen if you'll invest in SIP, or if you'll invest in the index fund. So take an example. Okay, I'll take an example where uh, if you'll invest just 15,000 rupees per month, and if you'll get 15% per annum for 15 years, it generate 1 year. Okay, if you think that index funds has not given 15% return per year, maybe it's given 12% per annum. Then let's see in how many years, in how many years you can get 1 crore rupees by investing only 15,000 rupees per month. Let's take an example. Let's take me an example in SIP calculator. Let me show you. So I'm going to the website directly, and I'm just opening my SIP calculator. So here is SIP calculator. So I'm just going to any SIP calculator. Example, I'm going to grow SIP calculator. Okay, so in this case, if you'll see the SIP monthly investment, I'm just putting 15,000 rupees. And if you'll see the market index fund return in India, it's all average 12% per annum. Okay, so in this case, so if you'll see, if you'll invest for 20 years, then it's giving 1 crore, 1 crore 49 lakh, right? If you invest for 15,000 and at the 15 percentage, then in 15 year itself you will get 1 crore rupees. If you will 15,000 and if it is 12 percentage, then in 17 years you will get 1 crore rupees. Okay, so this explains you like how the benefit is and how without thinking anything if you invest in any index funds, right? There's so many index funds that are available. Okay, like so many like Nifty 50 index funds where you can get you can build, you can create your wealth by uh, doing only investment in the Nifty 50 or any index funds in any market. Okay, so the next is, so what are the steps you need to consider to before jumping into index funds? One is the market fluctuations. Okay, uh, so if you'll see, if you'll start your investment at any time, so what will happen during the short term, the market will fluctuate, right? When the market will fluctuate, you should not withdraw your money. You should keep adding, and you should keep for the long term perspective. Okay. Yes, what you can do instead of withdrawing, if you can add more value like buy on dip kind of thing, okay, or some people they used to call that top up, right? If the market gets down, okay, okay, so during that time you can top up that index funds, or okay, you can add more value instead of withdrawing. Okay, so you should stay invested for the long term. Next is limited upside potential. Uh, so if you'll see, there are high chances that from the news media, from the TVs, from the social media, you will able to see there are so many stocks which outperform from the market, right? So in this case, you will have you will think that you are making wrong decision by investing in index funds. Okay, you should have invested in those quality stocks where those stocks are outperforming from the market, right? Nevertheless, that is the correct statement. However, if you have the skills, yes, you can go for it, but maximum number of people will not have that much knowledge, right? So in this case, even though there is a high chances that very limited scope for the upside potential for the index funds, but in the long term, like as I saw in the SIP calculator, it creates huge wealth, right, on an average. So you should consider that, and we should not get away by the tips or from any news. The third is the no individual stock selection, right? So in this case, what will happen? The no need to follow any specific industry, specific stock or specific sector, right? So that will help you a lot, yeah, when you will invest in the index funds. The next, so what's the conclusion? The conclusion is like as Warren Buffett said, index funds no, because of broad market exposure, because of low cost of action, low cost, because of consistent performance, and because of simplicity, we can go uh, for the index fund. Okay, so we should not get away by the uh, short-term market trend or anything. We should keep the investing for the long-term purpose, and we should keep target to our investment goals for the long-term perspective, and we can create a huge wealth. Like as I said, as I shown in the my this video, that by investing 15,000 rupees at the 12% per annum, in 18 years, 17 years, 18 years, you will get 1 crores of wealth, right? So this is a very good statement, no, which you saw in the calculator itself. So because this will help you a lot. Uh, okay, so because of this, the Warren Buffett has told also, like how funds are outperformed from the market. Hope this video helped you to understand how what is the power of index funds and how to create a maximum wealth. Okay, and why Warren Buffett has told that index fund is very good, right? If you like this video, please like the hit button, please hit the like button, and subscribe to our channel and share with your friends. And we'll come up with the next video. Uh, we'll see you then. Thank you.